Hi everyone, and welcome to a brand new episode. I'm Marcus, and today we're looking at Meta Platforms, formerly known as Facebook, ticker symbol FB. We'll cover the income statement, balance sheet, cash flow, key figures, our key feature, and the technical aspect of the stock. Should we be buying the stock? Let's find out. Meta platform had of December last year 3.5 billion monthly users on their platforms, and their mission is to give people the power to build community and bring the world closer together. The technology helps people connect, find communities, grow businesses, and learn about what is going on in the world. Meta is now moving beyond the 2D screen and are investing heavily on the immersive experience like augmented and virtual reality, which they believe is the next evolution in social technology. The company reports the results for two segments. The first one being the family of apps, which consists of apps such as Facebook, Instagram, Messenger, and WhatsApp, and the second one being Reality Labs, which is offerings in augmented and virtual reality products. Meta's business is characterized by innovation, rapid change, and disruptive technology, and they compete with companies that provide connection, sharing, discovering, communications products and services to users online, as well as companies that sell advertising to businesses looking to reach consumers and those that develop tools and systems for managing and optimizing advertising campaigns. Some of their competitors consist of Google and YouTube, Amazon, Apple, TikTok, Microsoft, Snapchat, WeChat, and Twitter. And when it comes to sales, most of their marketers use their self-service ad platforms to launch and manage their advertising campaigns, but they also have a global sales force that is focused on attracting and retaining advertisers. And Meta sales force operates in more than 80 cities around the globe. And the company have historically grown organically by people inviting their friends, but has of lately begun investing in marketing their products and services in order to grow their brand and help build communities around the world. And when it comes to government regulations, the company are subject to a variety of laws and regulations in the United States and abroad that involve matters central to their business, many of which are still evolving and being tested in courts and could be viewed in ways that could harm the business. These laws and regulations involve matters including privacy, data use, data protection, and personal information, just to mention a few. And Meta has of December last year a global workforce of more than 71,000 employees in more than 80 cities around the globe, and they are expected to grow the workforce for a foreseeable future. As any business, there are risks to consider that can have effect on the business, the financial condition, and results of operation. There are risks related to their product offerings, such as their ability to add and retain users and maintain levels of user engagement. Another is reduction in spending by their clients. Another risk is related to the unfavorable media covers that have had effect on Facebook. We have also seen risk related to government regulations, for instance, governments restricting their users to access Facebook. If we look at the risk related to their product offerings, we can see that if Meta fails to retain existing users or are unable to add new users, if the user decrease their engagement because of a competitor platform such as TikTok, that could seriously harm Meta's revenue. The size of their user base and their users' level of engagement are critical to Meta's success. Their financial performance has been and will continue to be significantly determined by their success of adding, retaining, and engaging active users. Another risk to consider is the fact that Meta is heavily dependent on ad revenue, and the loss of marketers or a reduction of their spending could seriously harm the business. Most of Meta's revenue are ad revenues coming from Facebook and Instagram, and Meta stated in their annual report that many of their marketers only spend a fraction of the overall advertising business on Meta. And with that said, let's look at the numbers. If we take a look at the numbers, let's start off with the monthly active users, and we can see that the worldwide engagement is growing, but it's not growing with that. The rate is not high. But if we take a look at the United States and Canada, we can see that the rate is very slow. Even though the numbers are improving, the rate is very slow. I would like to see improvements in this area. And same thing looking at Europe is that even though the numbers are improving, improving. The rate is very low. But if we compare that to Asia and Pacific, we can see that Asia and Pacific has a much higher rate of development, which is a plus. I like this one. Also, if we look at the rest of the world, we can see lately we have seen lower numbers, but overall trend is positive, which is a plus. Now let's jump over to the metrics. We can see that the Meta platform is traded on Nasdaq and are in the technology sector. Their market capitalization coming in at $525 billion and their revenue coming in at $117.9 billion. PE ratio coming in at 13.9. I like it because I like companies with a PE ratio of 20 or below. So having 13.9, that is a plus. That is a go for me. But guys, when you see a stock with a high PE ratio, that tells you that the market expectation of the stock is high, and therefore you might see capital gains on those stocks because there's a lot of expectation and a lot of investors that is driving the price even higher. But the overhanging risk is if the company doesn't meet those expectations, we will see the stock price fall, as we saw with Netflix and PayPal. But the same thing goes when you see a stock with a low PE ratio. That tells you that the market expectation of that stock is low, and therefore you might not see capital gains on those stocks. So keep that in mind. So having a PE ratio of 13.9, that is a plus. Profit margin coming in at 33%. I like it. I like companies with a profit margin of 15% or higher. So having a 33, that is a plus. I like it. Now, price to sales ratio coming in at 4.4. Normally, I like companies with a price to sales ratio of maximum 4. So having 4.4, I understand it's not far from the threshold. You want to be flexible, but it's higher than what I normally like to take a look at. So that is a no for me. Price to book value coming in at 4.5. Normally, I like companies with a price to book value of maximum 3. So 4.5, I understand. Same thing here. It's not far from the threshold, but still it's higher than what I normally like to take a look at. So that is a no. So if we were to summarize, PE ratio within my range, price to book value is too high, and price to sales ratio is too high. In my eyes, Meta is at its current state is overvalued. Now, they don't pay out any dividend, which is a shame because I like those recurrent income, and the return on equity is at 31%. I like it. Return on equity tells you about a company's ability to create return on their equity. And as for an investor, you want to have make sure you have a company with a positive return on equity, because that tells you that they are able to create return on the capital you about to invest in them, especially when you have a company that doesn't pay out any dividends. So having 31%, that is a go for me. Return on assets coming in at 18%. I like it. So that is a go for me. So the stock is currently traded at $199 per share. And if we look at the moving average, we can see that we are below the 200-day, the 50-day moving average, also below the 200-day moving average. The indicator is telling me that we might see the stock price decline. If we take a quick glance on the chart, we can see that we have been moving within a positive trend channel for quite some time, but as of late, more or less stagnated, and we've seen that the expansion here, and then the price broke below, and now it's moving within a negative trend channel. But we'll take a closer look at the technical aspect of the stock further down. But let's jump over to the income statement, and what we can see here is that the total revenue went from $40.7 billion in 2017. It has grown to $117.8 billion in 2021, and the numbers have been growing steadily every year. That is a plus. I like it. Gross profit went from $35.2 billion up to $95.1 billion, and same thing here, the numbers have been growing steadily every year. That is a plus. I like it. Net income went from $15.9 billion up to $39.4 billion, and the same trend here, these numbers have been improving, but we fell off in 2019, but has since been improving every year. So I like it. That is a positive trend. Now let's jump over to the balance sheet, and what we can see here is that the current assets is greater than the current liabilities, which is a plus. I like it. Basically, it's telling you that if the company were to convert the current assets to cash, they're able to pay off the current liabilities, which is a plus. But they are also able to pay off their total liabilities. Imagine being able to pay off your mortgage, your car loan, your student loan, your consumer debt, everything and still have capital left on the table. That is just amazing. So that is a major plus. I like it. If we take a look at the total liabilities, we can see it went from $10.2 billion up to $41.1 billion, and these numbers have been growing every year. We can see a huge difference between 2018 and 2019, but I would like to see them start reducing their total liabilities, also the rate which is growing. So this is negative. If we take a look at the outstanding share, we can see that the outstanding share have gone from 2.9 billion shares down to 2.8 over the last 5 years. So what is this telling us? It's telling us that when you see these numbers decline, that means that the company is doing buybacks. They are buying back the shares, and also meaning that there are fewer and fewer available shares on the market, meaning that your share of the company is growing. So this is a plus. But if we were to see that these numbers are growing, that means that the company is issuing more and more shares, meaning that there are more and more available shares out there, also telling you that your share of the company is decreasing. You're being diluted as an investor. And outstanding share, there's a lot of investors that either skip this part or doesn't know about it, because they've been looking at a company's balance sheet and they see a strong balance sheet. They see, for instance, that the assets is there and the debt's not growing that much, which is a plus, which is great. But on the other hand, the company is issuing more and more share, and that's a way for a company to bring in more capital without taking on more debt. So keep that in mind. So seeing that these numbers are decreasing, that is a plus. I like it. Now let's jump over to the cash flow. And what we are interested here is that the operating cash flow versus the capital expenditure. And we can see that the operating cash flow landed at $57.7 billion and the capital expenditure at $18 billion, and a huge difference. So that is a plus. I like it. Also, the fact that the operating cash flow went from 24.2 billion up to 57.7 billion, and these numbers have been improving every year. That is a plus. I like it. Capital expenditure, we can see, went from 6.7 billions up to 18.6 billions, and these numbers have been growing for the last 5 years. That is a plus. That means that they are doing investing in their business, which is a plus. I like it. Now let's jump over to the key figures. And what we can see here is that the earnings per share went from $5.4 per share up to $14 per share, and these numbers have been growing. We fell off in 2019, but overall trend is positive. I like it. Revenue per share went from $13.9 per share up to $42.6 per share, and these numbers have been growing steadily every year. That is a plus. I like it. Equity per share went from $25 per share up to $45 per share, and also same thing here. These numbers have been improving over the last 5 years. That is a plus. They don't pay out any dividend, which is the shame, because I like those recurring income, and also I like companies that grows their dividend every year. So gross margin, we can see, went from 86.5% down to 80.7%, and these numbers have been been lower and lower every year. That is a negative. So this tells you that the cost of goods sold is growing, and also that the company is enabled to become efficient. They need to find ways to be more efficient, but still these are high numbers, and also that we need to compare these numbers across the industry and see how is Facebook doing compared to their competitors. But overall trend is negative, so that is a minus. Operating margin went from 50.6% down to 40%, and these numbers have been falling. We improved for the last 2 years, but overall trend is negative. But we could see a shift in the trends in operating margin, but here it's negative. Profit margin went from 39% down to 33%, and we can see that we improved 1 year, but has since seen lower and lower numbers. So this is negative. Return on equity went from 21.4% up to 31.5%, and these numbers have been improving. We fell off in 2019, but overall trend is positive. I like it. Return on assets went from 18.8% up to 23.7%, and these numbers have been improving. We fell off in 2019, but overall trend is positive. I like it. Solidity tells you about a company's financial strength for the long term, and we can see we went from 87.9% down to 75%, and these numbers have been falling every year. That is a negative. We've improved in 2020, but overall trend is negative. Balance sheet liquidity went from 7.5 down to 2.5, and we've improved 1 year but have since seen lower and lower numbers. This is negative. Debt ratio went from 0.14 up to 0.33, and these numbers have been growing. They reduced this number in 2020, which is a plus, but the numbers have since been growing, so this is negative. So this is telling you debt ratio of 0.33 means that in 2021 they had 0.33 times more debt than equity in the business. So it's not a huge number, but seeing that these numbers are growing every year, that is negative. So that's why I give it a minus. Now guys, we have gone through the income statement, balance sheet, cash flow, the key figures. Now over to a key feature, which is the stock analyzer. What the stock analyzer does is that it gives you a simplified, holistic overview of the company's performance, and it saves you a lot of time. If you want to dig through the numbers, you can dig through the numbers or have the software do the heavy lifting for you. If we look at the screen, we can see that the PE ratio is below 20, which is a plus. They don't pay out any dividend, which is negative, but the numbers of outstanding share have decreased, which is a plus. The revenue increased over the past 5 years, that is a plus. Profit margin above 15%, that is a plus, and profit has increased over the past 5 years, that is a plus. Current assets is greater than the current liabilities, that is a plus, and solidity decreased over the past 5 years, that is negative. Balance sheet liquidity decreased over the past 5 years, negative, and debt equity ratio increased over the past 5 years, negative, and the total liabilities have grown over the past 5 years, negative. Guys, as you can tell, it gives you a simplified, holistic overview of the company's performance. If you want to dig through the numbers, you can dig through the numbers or have the software do the heavy lifting for you. You can have this software along with everything we've gone through, plus access to our discussion forum where you'll be able to chat with me along with other members for only $10 per month. So make sure to head over to comus.se and become a member today. Okay? Thank you. But now let's take a look at the technical aspect of the stock. So here we have the chart. Let me just lay down some lines here. Let me do a support line, something like that. And let me change that color to green. Let me do one more support line, something like this. And let me do one resistance line, something like that. So guys, as you can tell, we have been moving within a positive trend channel for quite some time, and as of lately seen the stock price decline rapidly, and this is due to the fact that Facebook reported that they are not growing user base as fast as expected, and this had the market react and did a huge sell-off. But if we look at the chart, what we are seeing now, are asking ourselves, has Facebook reached their bottom? Is this time to enter the stock? Because we have seen, if we go back historically, we have seen these levels before, and the market have really, the buyer has really come back and pushed the price even higher. So for me personally, I think Facebook, or Meta as they call themselves these days, is a great company and has a lot of potential going forward. Now there is a lot of talk on the streets whether the future of metaverse will be dominated or driven by Facebook, and there is a lot of people skeptical about it, saying that this is a great technology, but the reputation of Facebook is really damaged, and therefore there's a lack of trust in the business. But we are seeing that Meta is driving, really investing, and will continue to grow their workforce, and are expected to hire more than 10,000 developers in Europe. So they're really pushing for this software, and for me personally, I believe in the technology, and I think that we'll see a lot of advancements going forward, and there will be a slow acceptance, but overall I believe in the future of this technology, and therefore positive of Meta going forward. So for me, normally I like companies, dividend paying companies, and I like companies that both provide capital gains at the same time provide dividend income and growing dividend income. But looking at the Facebook and the historical levels we are right now, I see a lot of potential going for entering the stock and just hold the stock for a couple of years and seeing that buyers come back again and seeing that they work on improving their brand and improving their trust, and I see their ad revenue, and I also believe that there will be growing their user base, especially now we saw that these numbers for Europe and Canada is not growing that much, but for Asia Pacific and the rest of the world, I think there's a lot of potential in those areas. So I'm positive about Meta, and I think for me personally, I would be buying the stock at these areas, and for a potential gain for quite. I'm positive of holding the stock for a couple of years. So that's what I would do. So that's how I would trade the stock. How would you trade the stock? Please let me know in the comment section below, and also let me know if you have any questions or have stocks you want me to look at. And as always, please do your own analysis. Thank you so much for watching. I am truly grateful and appreciate it. If you have enjoyed this episode, please give me a thumbs up, comment, subscribe, and until next time, guys, take care. Bye-bye.